Welcome back for my daily report market analysis videos with me, Richard, market analyst at Hantec on Friday, 6th of September. It's payrolls Friday. Let's have a look at euro dollar. And we've seen euro dollar, which fluctuated around yesterday, initially sharply higher, but then fell back into the close. It actually closed almost, well, dead flat on the day, 110.33. Now, what we've seen is this resistance, 110.25 to 110.50. Now, that is still a factor into today's session, and the market is sort of consolidating between those two levels, pretty much to the pip actually, highs and lows of the session, and you can see that on the hourly chart as well. So the market is consolidating in this resistance zone. Obviously what we've got is still this downtrend channel, which you'd say that near-term rallies are a chance to sell, because obviously the market continues to trend lower. And considering what we saw in yesterday's session, you'd say that may well be still the case. And you've got the momentum indicators, which remain negatively configured on a medium-term basis. Let's get the crosshair around the RSI, which continues to fail around 50. But there is still room to run in the move higher, potentially. Currently in the low 40s, and you've got this little uptick on stochastics and MACD lines ready to possibly show a positive signal as well. So there is still potential room to run higher in this little recovery move. But as I said, yesterday's failure at 110.85 was a little bit disappointing, and unless you get, I think, a close above 110.50 today, I think that we might start to see the euro bulls wavering a little bit. In that regard then, it is an important non-farm payrolls number that we have today, because obviously how that the market reacts to payrolls report today, if it's a weak payrolls report, you could see the dollar back under pressure again, and subsequently you could see the euro rallying against the dollar. So that would be the key factor there. If you see a weak payrolls report, you're likely to see euro dollar higher, and it would be obviously a strong payrolls report would be 10.25 initially supportive, but again below 110 big figure, it would broadly be negative. I think would take back to a negative configuration here on, and basically put to bed this recovery phase that we've seen. This is on the hourly chart, because you've still got at the moment this recovery intact. You've got the RSI on the hourly holding above 50, MACD lines holding above neutral. But if we start to break down below 110.25 and then 110 big figure, I think that would be suggesting that the market is taking a more of a negative outlook again. Sellers back in control within this downtrend channel. But there is still, as I said, room on a positive payrolls report for, on a negative payrolls report for a tick higher on this euro dollar chart, and it will be very interesting to see how the market reacts around this 110.85 resistance from yesterday, and also 111 big figure, this old key low area. So with that in mind, I wish you good luck in your trading. Click here to subscribe to our YouTube videos, and also go to our website where you can sign up for a payrolls webinar that we are hosting today. Thank you very much.